What is up, everybody? Before you guys go ahead and watch this next module, if you want to watch me and the team trade live for absolutely free for 7 days, as well as get access to everything that we have within the Learn the Markets Discord community, go ahead and check out the 7-day free trial. If you're not already in the Discord, I will attach a link at the description of this video so you can go ahead and check that out.
What is good, everybody? Welcome back to another LTM Crash Course module. Today we have module number 5, and we're going to be discussing liquidity. Now, liquidity is a concept that gets thrown around an awful lot in our space, but it often gets overcomplicated when there's absolutely no reason to do so. It's actually an extremely simple concept to understand and actually visualize on the charts once you're able to understand it. So our goal with today's video is to simplify liquidity, explain what it is, how to actually visualize it, how to find it, and its overall relevance to us as traders with some actual visual examples on the chart. Now, with that being said, before we actually start diving into it, I just want to make sure that you guys are not confusing liquidity, the actual finance term, which refers to how easily or how efficient an asset or security can be turned to cash. That is the proper finance definition, okay? But how we're actually going to interpret liquidity when it comes to trading is going to be slightly different. So I don't want you guys to actually confuse the two with each other, okay? With that being said, what is liquidity? All liquidity is referring to is areas on the charts where there are people getting in and out of the market. These are areas with high market participation. These are often also going to be your swing highs and your swing lows. And I want you guys to view these as pools of money because people are getting in and out of the market at these areas. Hence, the high amount of market participation. That is all liquidity is from a conceptual standpoint, okay? Now, the reason why liquidity is relevant to us as traders, the whole point why we're even here talking about it in the first place, is because of two main reasons, okay? These are areas that the market will likely gravitate towards, okay? These are areas where price is going to be magnetized to. I want you guys to use that analogy. Look at it as a magnet because these are areas of pools of money. Price is likely to gravitate towards these areas and have some sort of major reaction at these points. Not only that, but the second reason is that these are areas where price is also likely to manipulate. And all that really means, it's a fancy way of saying these are areas where we can see potential reversals from, okay? And what we're actually going to call this manipulation of a high or a low is going to be a sweep of liquidity. There's your soundbite right there. That's pretty much it for the conceptual. We've gone over what is liquidity, why it's relevant to us, and how to visualize it. So now let's actually go over some examples to essentially wrap up this concept. Let's start with visualizing the most basic part of liquidity. What you guys see right here is an uptrend, right? We see consistent higher highs and higher lows being put in by market structure. Now, with what we see here, just based on what you see and how structure is moving in this basic drawing, where do you think the next probable area that price is going to move to next? If we've continued to respect overall bullish structure, we've continued to put in consistent higher lows, well, the most likely area, the most probable area that price is going to move to next is this previous high. And we also know that not just because it's a point of structure, but we also know that key swing highs and swing lows are going to be areas of liquidity. And we know that the market is likely to target these areas of liquidity. So hence why in this continuation, if price is going to hence continue to the upside, the next most probable area that it's going to draw to is this next subsequent higher high. And the liquidity sitting above highs, we are going to call buy side liquidity, okay? And the liquidity below significant swing lows is going to be called sell side liquidity, abbreviated SSL, and then for buy side, BSL. Okay. Now, understanding that part and that overall principle shouldn't be hard, right? In an uptrend, if we are continuously putting in higher highs and higher lows, and we respect a previous higher low by printing another subsequent higher low, the next most probable area that we're going to draw to is that previous higher high, right? And the same thing would be for a downtrend, just vice versa. If we were consistently putting in lower highs and lower lows, and we continue to respect lower highs with a subsequent lower high being printed, the most probable area that price is going to move to next is going to be the next subsequent lower low. And if it's able to take it out, we have a continuation. That should be easy. Understanding that these are areas where price will gravitate to is extremely easy because it kind of goes in line with market structure, hence why we covered it first. Now, the second part, liquidity sweeps, right? These are areas where price can potentially reverse from. And this is exactly what I'm showing you here with market structure. We're not covering candlesticks yet, but I will show you guys at the end of this video examples with candlesticks. But what I'm showing you guys here is price, right, came down, it dipped below this previous higher low, it dipped below it, but it ends up manipulating and reversing in the opposite direction, right? We sweep sell side liquidity and we end up respecting overall bullish momentum, for example, because we ended up creating a bottom wick here, and I'm going to show you guys that with actual candlesticks and price action. But we end up manipulating this low, we take out sell side liquidity, and we end up potentially drawing higher in something like this, where we take out the previous subsequent higher high, and then we have a continuation of the overall bullish momentum that we had seen. So in this case, this is what we would call a sweep of sell side liquidity. Now, the way that we're actually going to confirm these sweeps of liquidity is going to be via breaks of structure, okay? That's why we cover market structure first before actually getting into liquidity, because it's not just going to be, okay, I see a bottom wick being created at a previous low, I'm just going to long this. That's not with actual probability. There's no thought process behind that, okay? So the way that we're actually going to be able to confirm these sweeps of liquidity is going to be via breaks of structure, okay? So I'm actually going to show you guys what that would look like with the same exact example. Just going to change around the chart, and then I'm going to give you guys a little bit more explanation with regards to the why, what is actually happening at a conceptual level with a sweep of liquidity. So this is actually how we would go about confirming a sweep of liquidity with a more proper way of actually visualizing it when it comes time to bring it over to the charts and actual candlesticks. We'll have something like this, right? We have consistent higher highs and higher lows being put in, and then we have a lower high that gets made towards the next leg that drops towards this previous higher low. And when we end up seeing is that we end up sweeping this previous higher low, we take out sell side and we break back above this lower high after manipulating that low, indicating a break of structure to the upside, which realigns us with the overall bullish momentum that we were seeing previously, okay? So in this case, we simply manipulated a low and then continued with the overall direction and narrative that we had seen developing previously, okay? This is exactly textbook how we would go about actually confirming a sweep of liquidity. So let's say if you were looking at a higher time frame key low or key high to get manipulated potentially for a sweep of liquidity, the way you would actually confirm it is with a lower time frame break of structure that shows you, okay, we actually did manipulate this low or this high, and we are now then likely to reverse in the other direction, in this case in the underlying direction that we were developing in previously. Now, I actually want to dive into some of the conceptual with this as to why this is important, why we're even calling this a manipulation. Like, what is our actual interpretation of this? So I want you guys to think about it and put yourself in the shoes of how every average retail trader that knows just a little bit about trading, how they actually think, right? We see consistent higher highs and higher lows being put in, right? Everybody's able to recognize this as an uptrend, okay? Now, there's going to be people that as soon as this high gets made and they see this slight drop, they're going to think to themselves, oh my God, this is a reversal. I'm going to try to catch it early. These are people that are trying to time a reversal, and they're absolute fucking idiots and buffoons because they didn't wait for a break of structure, for example, for price action to actually show you the signatures that it does indeed want to reverse. So there are people that are going to short this top trying to time a reversal to the downside. Their stops, right, if we're able to just think about this, their stops are most likely going to be either at this high or at least slightly above it, right? Leaving a pool of money right there. Why? Well, because if price action is able to come back to this high and take it out, their short thesis and their thesis of, oh, this is a reversal is going to be completely invalidated, all right? That's pool of money, number one. And then number two, there are also people, right, that at this low, right, would have bought on a continuation. And let's say they didn't actually take profit here, right? Well, their stops are going to be right below this higher low, either right at it or right below it, giving us pool of money number two. So what is price action actually doing here? price action is manipulating this low, making people think that one, either stops are getting taken out here from people that went long. Two, when people see this price action slightly dropping below that low, let's say on a lower time frame, they're going to think to themselves, oh my God, this is a break of structure. Let me go ahead and go short. And that unleashes a pool of money at this point when we sweep sell side for both people getting into the market, the people that wanted to go short as soon as this low gets broken and they don't wait, for example, for a bottom wick to get created or for an actual confirmation for a break of structure, for a candle closure to actually close below that low. And there are also people that are getting stopped out when they went long before, and for example, they didn't take profits here and they have their stops right at that previous higher low. This unleashes a pool of money for the market to actually move in the underlying direction that it really wants to move in. And what we were seeing previously is that we were moving bullish. That's why one of the first principles that we teach you guys and that we want you guys to understand is higher time frame narrative. That's why we start with market structure. You need to be able to gauge direction and understand the narrative and trend that price action is showing you. That's your starting point, right? So in this case, once we actually are able to put it all together, we see a low that gets manipulated. We fake out people thinking we're going to the downside. We also stop people out that didn't take profits up here and have their stops right below here for these longs. We unleash a pool of money. We manipulate that low. And how do we actually know that we ended up manipulating and having a sweep of liquidity? We confirm it with a break of structure above this previous lower high, leaving us at the next most obvious draw. The next most obvious place where price is likely to move to next is the opposing pool of liquidity, being that next subsequent high. That's it. This is a sweep of liquidity explained right here in this case with a bullish example where we swept sell side. Now, let's go ahead and actually find some examples on the chart. Okay, guys, there's three main things that I really need you guys to keep in mind before we actually start finding some examples with price action. One, you guys can't forget that price action is fractal, meaning these concepts that we are covering, you're going to be able to see them across all of the time frame. Now, just because of that, that doesn't mean that every sweep of liquidity that you're going to see on the 1 minute, you should really pay attention to. As always, higher time frame narrative is going to hold more significance, okay? So keep that in mind. And don't get caught up with all of the minor noise that you see on these smaller time frames, okay? Now, second, the focus here right now with visualizing and actually showing you guys, showcasing examples on the chart is just so you guys can actually take note of what it looks like, what a sweep of liquidity actually looks like on the chart. And we're going to be showcasing it on the daily, 4 hour, and 1 hour. But more importantly, third and final, is just because we are spotting these sweeps of liquidity doesn't mean that you immediately, oh, we swept here, we have to reverse. Price action doesn't have to do anything at the end of the day, let alone what you want it to do, okay? So just because these are areas where price could potentially reverse from, it doesn't mean that it has to, okay? We can't forget the first part, nor can we forget the second. These are areas where price is magnetized to, likely to gravitate to next. And these are also areas where price can reverse from, okay? So keep that in mind. So with that in mind, let's go ahead and dive into some examples on the daily, 4 hour, and 1 hour here on ES. All right, and these should be key swing highs that just stick out to you like a sore thumb. All right, so for example, one of the first things that I see here is we had this previous higher low on the daily, and we swept it with this candle right here. So we had a sweep of sell side beautifully right here. And from here, what did we end up doing? We actually put in another low. We ended up sweeping that, and then we ended up momentarily reversing to the upside, putting in a lower high on the daily time frame. All right, here we see another sweep. We have 1, 2, 3, 4 candles to the upside, then a red candle giving us our high, and we see that that gets swept literally the day right after. It is a very, very small sweep, but it does occur. If we actually were to bring that down on the 1 hour, let's, for example, go back and replay that so we can see. Let's bring it down first on the 4 hour. So here, what we actually see on the daily as a wick was a 4 hour closure above, right? So this is why higher time frame narrative is going to hold more importance. Make sure you're looking at your higher time frames. We had this high previously right here that ends up getting swept out right here, and we end up reversing. Now, if we were to bring that down to the 1 hour, what do we see? We see a couple of things. 1 hour, same thing, right? We have this high that gets put in, it gets swept out, okay? Then we have this next subsequent high that gets put in, and then this gets swept out because we know that in the 4-hour, ultimately we ended up reversing from there. And then on the daily, we saw these top wicks being created. Obviously, hindsight is going to be 2020. This is all going to be much easier doing it as price action has already played out. But it gives you guys the opportunity to see how we actually start framing this concept visually when it comes time to actually see it on the charts. All right, so you guys right there were able to see the example of a daily sweep of liquidity and actually bringing that same example down to smaller time frames and how that looks like. So now I'm going to go off replay and let's continue to find some examples on the daily time frame here. We have another example right here. We have a high that gets put in and then it gets swept out right here. So very, very, very small, but we do sweep this high with this candle and then we end up dropping. Right here, we have another next subsequent low that ends up getting swept out right there. It's a very, very small wick, if I'm not mistaken. Yes, very, very, very small wick. But as we can see right here, we end up sweeping this as well on the daily. Right here, we have a high. Now, here's a perfect example of, yes, we sweep it, but we do not reverse from there. So we ended up actually targeting, and that makes a lot of sense because we had broken above this previous lower high on the daily. We're developing with bullish structure, so you're not necessarily expecting a reversal from that point, but we do see that top wick getting created, and we do sweep out buy side momentarily right there. This should be very, very, very easy, guys. All right, very, very easy. Let's see if there's any other examples. Well, right here, this higher low gets swept out right here. Okay, and we have some perfect examples of this on the daily. Now let's go ahead and bring it down to the 4-hour and find some examples of sweeps of liquidity as well on the 4-hour. Now on the 4-hour, we're going to continue to point out some sweeps of liquidity so you guys can really understand this concept and have no doubts about it. So I actually see we ended up sweeping this low right here with this candle. So if I go ahead and actually play it back, this is a great example of just because we actually swept liquidity once again does not mean that we have to reverse. At the end of the day, price action doesn't have to do shit. So here we actually take out both of these lows that we had, this low and this low here. So we had relative equal lows. And when you guys see stuff like that, relative equal lows or stacked equal lows or stacked highs, relative equal highs, look at it as double the liquidity. So price is going to have some sort of major reaction at this point and is likely to target and draw to it. Okay, so as we can see, we have a fast drop. We end up sweeping these relative equal lows, but do we actually reverse back up to the upside? No, and that's completely okay. But we were able to see how initially we did sweep it, and then we actually had a continuation to the downside. Okay, so let's get out of replay mode. And let's continue to point out some examples. Here we have an internal high that gets swept. We have this internal high. Sweep it. Right here. We sweep this high and we dump. We also end up taking out this high as well right here. So if we keep going back, once again, this should stick out to you guys. So here we have a couple. So we had this low previously. We end up taking this out right here. Sweep that. Beautiful. Then I think we stack equal lows here. Once again, this shows the first principle that we had talked about liquidity. We had all these stacked lows right here, relative equal lows. So price is likely to move to and gravitate towards that area with some speed. And as we could see, we absolutely annihilate it and draw to it and dump. Let's continue. Let's continue. Let's continue. Let's continue. Some more examples. Boom. Sweep right there. Sell side taken. Here. So we have like, so this is a good example. We had these like relative equal highs. So once we get back up to this area, we can expect price to target these highs and at least move to it with some speed. And as we can see, we actually end up sweeping them, momentarily dropping, but we end up continuing bullish. Here we have another beautiful example. We have these previous lows get swept out right here. Okay. And at this point, guys, this should be very, very, very apparent. We have these external lows that get swept internally. here. Wow. Beautiful. Beautiful, beautiful, beautiful. Right here. High. Swept. Momentary push down. Lower high. And then we end up reversing to the downside. Okay. Let's point out a couple more examples right here. Right there. Sweep. Once again, this should, at this point, it's like clockwork, guys. It's like putting in the reps. This should be sticking out like a sore thumb. Do we sweep these lows? Nope. Nope. Okay, so we actually had a low here previously. We had stacked equal lows here, and then that gets swept. So we had these lows right here equal, and we sweep them. Okay, what else? What else? I mean, at this point, you guys should understand. So let's go ahead, clear this, and let's drop down to the 1 hour. And let's just cover a couple more examples, and we will be good to go. And we wrapped up the module. Right here, boom, sweep, swept, and then we targeted the opposing pool of liquidity before continuing to the downside. Here, we also covered this internal sweep on the 4 hour, but once again, price is fractal, so you're able to see it on a smaller time frame as well. All the time frames. Boom. Top wick, end up sweeping it, move lower. We have a low here, high low. Oh, no. Yeah, somewhat of a sweep. We end up slowing down and then reversing, but that's not a clean one. Let's forget about it. Okay. Let's see what else we got. We had these stacked highs here. Relative equal highs, and we ended up sweeping that. If we go on the 4 hour, this should be like a top wick that got created there. Oh god, relative equal highs. So yeah, so we ended up sweeping that and then reversing from it. This is why we also wait how price reacts at these areas, because a lot of the times, for example, the really, really clean examples that we've covered will be like a top wick getting created, then a push to the opposite side, or a bottom wick getting created, then a push to the other side. But there will be times where you see candles that will close above or below these swing highs or these swing lows. What matters then is you can't forget that you're just going long or short at these fucking levels because, oh, you think it's going to be a sweep because every high or low has to get swept. No. One, that is why we have a break of structure to confirm the sweep of liquidity, first and foremost. And two, these are potential things that could happen. Once again, price doesn't have to do shit. So what we would do here is, okay, we have a candle closure above, and we wait. We would wait price action. We would drop on a smaller time frame, and if we do end up breaking structure here to the downside, we would consider that a sweep, right? Let's continue. Here we have a ton of examples. We have this low that gets put in right here. That ends up getting swept right there and there. Beautiful example. Low here, swept. Nope. No. We have a high here. That gets taken. And then we dump down to the opposing pool of liquidity. So we can see we moved from buy side down to the next opposing pool of sell side there. Let's see some more examples. Boom. We can see that right there. Beautiful. Beautiful, 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 beautiful. Let's see any other points that are sticking out. Oh, yeah, there's a couple here. Okay, so these lows here get taken right there. These highs here get taken right there. We also had these as a potential draw, but we don't end up going there. These previous highs get taken right there. These lows here, we print Relative equal lows, it seems like. But this is pretty much it, guys. Like this should be simple. At this point, you guys should be getting the memo. Okay, you are pointing out these key swing highs and swing lows that are sticking out like a sore thumb, and you're seeing how is price actually reacting at these areas. Are we just gravitating towards them and absolutely annihilating them and using them kind of as targets, magnets that we're gravitating towards? Or are these areas where we're seeing these bottom wicks, top wicks getting created, these manipulations, and then reversing, okay? Start building that context around yourself because that's what matters, all right? With that being said, Module 5, finito, ladies and gents. I will catch you guys in the next module. As always, stay safe, stay blessed. Have a good rest of your day.